Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. Okay, so the big picture continues to have a dark blue late September 24 to late March 25 bearish Andrews pitchfork, prices basing themselves 3 weeks ago on the middle time, currently at 90.42, as well as the 50% Fibonacci line for 2025 at 91.33. The top side had been capped by the combination of 38.2% Fibonacci line in October 20 to May 23 move at 92.56, as well as the mauve medium moving average currently at 93.17, and also by the gold slowly declining long moving average currently 93.16. However, the push higher has met a fresh cap, and that's from the combination of three specific nearby congestions. The first is the 50% Fibonacci line, the October 23 to May 24 move at 94.80. This is an integral part of the 93.95 to 96.06 congestion. The second is the bright red neckline extension, currently 94.59, of the recent November 24 to February 25 reverse head and shoulders bottom, with finally the third being the green flatlining short medium moving average, currently 94.74. We're also in the center of a small February based congestion between 93.50 to 95.50, which only adds to the stickiness. Now, midweek last week prices dipped all the way down to just above the dark blue middle time, currently at 90.42, and almost made a weekly key reversal pattern as seen in one of the other metals, but not here. The dip, nevertheless, seems to have added some fresh ammunition for the attempt higher, but so far this hasn't got us that far. Now, I've mentioned here so many times before of three overhead congestions. The first is between 91.83 to 91.86 and is the weakest of the congestion areas, though last week saw prices dip into this before pulling back upwards. The second is between 93.95 to 96.06 and is the one we have become clogged down within these past few weeks. The final one is higher up between 97.50 to 99.95. Overall, we seem to have yet another attempt higher in the offing, but I'm beginning to wonder just how often prices will keep ramming into this overhead 93.95 to 96.06 area before it becomes discouraged. Just bear in mind this large congestion area we are within, and which stretch further overhead between 93.95 to 96.06. It may take some time to chew through it. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time, all affecting the market. To start with, we have the bright red, shallowly bullish shift pitchfork for the mid-December 23 to late July 24 move. For a while in March, we saw prices start to establish themselves over the middle time, currently at 26.42. But as I stated 5 weeks ago, and I quote, it was a tenuous hold over it and prices dropped down through it and have remained below, pushing further down. However, this pattern still works at the lower time, and that's currently at 23.33, end of quote. I added 4 weeks ago, and I quote, this is one to keep on this daily chart, as the low of the move has been right on the bright red lower time. Additionally, nearby we have the bright green neckline, currently at 23.55, of the October 22 to May 23 head and shoulders top, and the purple neckline, currently at 23.62, of the March to May 23 head and shoulders top. Both these have been pierced, but we have not as yet closed below either, end of quote. Since then, we have seen the bright red lower time punctured but repaired, with no closes below it, and it worked pretty well at showing the low of the recent move down. The bright green neckline was breached, but only one close below it, and the purple neckline was breached with two closes below, but one of those was barely below this. Thus combined, they eroded the bearish incentive enough to halt the immediate declines, basically in between the red lower time below and the bright pink lower time above, and that's currently at 24.29. And as are now breached and possibly looking to be repaired, longer term November 15 to April 20 bullish Andrews pitchfork. 2 weeks ago, and again last week, the market pierced the significant 50% Fibonacci line of the December 23 to May 24 move, just above at 24.54. I referenced this 50% Fibonacci line of December 23 to May 24 move because I did say 6 weeks ago, prior to all the big moves down, that, and I quote, in truth, I could see any significant move carrying on till this 50% Fibonacci on December 23 to May 24 move at 24.54, end of quote. Now, the reason I said this is because prices finally broke down through the previously broken, then repaired, then finally broken, very shallow but quite wide, October 24 to April 25 bear channel. This back then gave a primary target at 23.17 and a secondary hard to reach target X at 22.10. The primary target was reached, but as for the secondary target X, well, as I said 3 weeks ago and again ever since, and I quote, I'm not sure it will be, though it does complement the July 24 low at 22.09.5. I will leave it on for a little while longer, end of quote. I was contemplating retiring it last week. I am still contemplating retiring it this week. So 2 weeks ago I said, and I quote, right now I'd say the market is contemplating one of two actions: to either treat this as a potential bearish half hesitation move, or do what it did back in July and August last year at approximately the same levels and turn back upwards. I'm watching prices and their reactions to the overhead pink lower time and the bright red lower time below, and I'm also on a watch out for any false breaks as well, end of quote. Now, last week and the week before, we saw prices move back up over the bright pink lower time, but not make much real progress higher. Indeed, the action since early to mid-April became a small rising wedge pattern, and that's currently 24.60 to 25.01. This pattern, as I said last week, and I quote, does not favor a move higher or lower, or breakouts occur in both, as breakouts occur in both directions, and their breakouts can be somewhat unreliable. That all being said, I'd keep a close eye on this small pattern in case it becomes indicative of a larger move, end of quote. Last week we had a break lower, but it was not sustained, and I regard it now as a false break lower, so I am still carefully watching what we do at the bright pink lower time. LME 3-month lead. I'm continuing to see some interesting, if overall indecisive, moves in this market. Key features here, and some of them have been here for a while, all relate to a very large descending triangle or a related descending wedge pattern. Both are made up from above by the early July 24 to early March 25 purple broken downtrend, currently at 1957, and also for now by a very close by bright red broken early August to late December 24 head and shoulders neckline, currently 1954, though it could also be from below by a dark blue, also breached and also possibly broken neckline extension, currently at 1897, of the July 23 to February 24 head and shoulders continuation pattern. The bright red neckline extension is for a descending triangle, the bright blue neckline extension is for a descending wedge pattern. So 10 weeks ago prices broke higher out of this pattern, and 7 weeks ago they broke higher again over the long moving average, currently at 2014. Back then, and again 5 weeks ago, they peaked at or just under the December 2024 high at 2103. In the whole process, the market made a small March-based double top pattern, even Adam type, and prices turned lower and achieved both the primary and secondary targets below for this pattern. But the market continued lower. This tied in with something I'd seen for the past few months, the possibility for the action since the start of December last year, setting up to make an ascending scallop pattern. I even suggested 5 weeks ago, and I quote, the market may try down towards the lower levels, but then turn and go for the top side targets, end of quote. Okay, so to recap, we created over March and very early April both an ascending scallop pattern and a double top pattern. Additionally, the market broke down through the bright red neckline and a dark blue neckline, thus moving higher over March and early April, becoming a false break higher, and thus we saw a big move lower. I also added 4 weeks and I quote, I would like to see more action down here to confirm this is also not a false break, end of quote. Well, we didn't see that necessary action or confirmation. And prices from mid-April until last week moved back up over the dark blue neckline extension, over the bright red neckline, and eventually over the purple downtrend extension. This now negated downside targets for the descending triangle pattern. Then last week, the overhead descending medium moving average, currently at 1980, running in parallel and a little higher to the broken purple downtrend, capped prices and we headed back down, but only a bit. So what have we now? Well, we've had force breaks in both directions, and so I continue watching in case we do finally have a proper break in either direction, but I'm not holding my breath over it. Instead, in the near term, please keep an eye on the immediate overhead resistances. These are the 50% Fibonacci line for 2025 at 1971, the seemingly very important mauve medium moving average, the green short medium moving average is just above that, currently at 1989, the congestion at 1994 and between 2001 to 2003, plus the long moving average. Above all, and this is very compelling, let me once again make the point one I've been making all this year and will continue to do so going forward. It has been and still is to me the most important point of all. So, at the end of December last year, we saw that 2024 had created a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.